Insurance. The tax treatment of premiums and benefits in individual health insurance depends on the type of policy. Taxation of disability income insurance. Premiums that policy owners pay for disability income insurance are not tax deductible. However, benefits are not taxed. An employer who pays the premiums for an employee's policy can deduct the premiums. The payments are not considered taxable income to the employee. However, the employee pays taxes on benefits received. Taxation of medical expense insurance. Premiums paid for medical expense insurance may be added to other unreimbursed medical expenses. These may be deducted from taxable income to the extent they exceed a certain percentage of an individual's adjusted gross income, AGI. Benefits are not taxed. Medical expenses that are not covered or reimbursed by insurance may be deductible. A person can deduct medical expenses that exceed 7.5% of AGI. Example. Lisa's AGI is $100,000. She has $12,000 in unreimbursed medical expenses. Lisa can deduct those expenses that exceed 7.5% of AGI. She calculates the deduction as follows. Multiply AGI by 7.5% to determine the base, $100,000 times 7.5% greater than or equal to $7,500. Lisa can deduct expenses greater than $7,500. Subtract this limit from expenses, $12,000-$7,500 greater than or equal to $4,500. Lisa can deduct $4,500 from taxable income. The deduction applies to qualified medical expenses as the IRS defines them. These expenses include costs to alleviate or prevent a physical or mental defect or illness. It also includes premiums paid for medical, dental, and long-term care insurance. Benefits are not taxed. Premiums paid for disability income insurance are not qualified medical expenses and are not deductible. Taxation of qualified long-term care policies. Individually owned qualified long-term care, LTC, policies get favorable tax treatment in two ways. Benefits are not taxed, within limits. Premiums are deductible, within limits, to the extent total unreimbursed medical expenses exceed 7.5% of AGI. Benefits paid up to the amount of total qualified long-term care expenses, or a daily limit, $390 per day in 2022, whichever is greater, are not taxed. To receive these tax-free benefits, the insured must be diagnosed as chronically ill. LTC insurance premiums qualify for the medical expense deduction, up to the limits shown in the table. Please pause the audio and review the table. Taxation of AD&D benefits. The principal sum, death benefit, payable under an AD&D policy is not taxed if paid in a lump sum. The capital sum, dismemberment benefit, is also not taxed if paid in a lump sum. When benefits are not paid in a lump sum, any interest they earn while the insurer retains them is treated as taxable income when paid to the recipient. For your review. A disability income insurance policy owner cannot deduct premiums from taxable income. However, benefits are not taxed. A medical expense insurance policy owner may add premiums to unreimbursed medical expenses to qualify for a tax deduction. Medical expenses must exceed 7.5% of AGI to take the deduction. A qualified LTC insurance policy owner may add premiums to unreimbursed medical expenses to qualify for a tax deduction. Benefits are not taxed, within limits. An AD&D insurance policy owner cannot deduct premiums from taxable income. However, principal and capital sums are not taxed if paid in lump sums. Interest earned on proceeds retained by the insurer is taxed.
Okay, so which statement is correct about the tax treatment of premiums and disability insurance policies? Individuals can deduct premiums paid by employers. Only employers can deduct premium payments. Employers can deduct premium payments made for employees. Premiums paid by an employer are taxable income to the employee. Individuals can deduct premiums paid by employers. Which statement correctly describes the tax treatment of unreimbursed medical expenses? They are subtracted from premium expenses to determine the medical expense. They are added to taxable income. They are subtracted from gross income. I think it's this last one, a percentage of AGI. All right, which statement about the taxation of accidental death and dismemberment policies benefits is correct? The death benefit is not taxed, but the dismemberment benefit is taxed. Benefits paid in a lump sum are taxed. I think that's correct. All right, for 4. For income tax purposes, the premiums that a policy owner pays for a medical expense insurance policy are a medical expense deduction, a tax credit, non-taxable event. Let's see how we did. Yeah, they might. I see 2 new cars down here. They're gonna come down here. All right. Which statement is correct about the tax treatment of premiums and disability insurance policies? Employers can deduct premium payments made for employees who are covered by disability income insurance policies. Employers can deduct the premiums which are considered taxable income to employees. However, employees pay income tax on any benefits they receive. All right, question 2. I got this correct. Hey. All right, a person can deduct expenses exceeding a certain percentage of AGI. Number 3. Which statement about the taxation of accidental death and dismemberment is correct? Interest earnings on benefit held by the insurer are taxed. All right, and the last one is medical expense deduction. For income tax purposes, the premiums that a policy owner pays for a medical expense are a medical expense deduction. So that is interesting. I did not know that. Unreimbursed medical expenses. All right, that's it on this one. It is a short and sweet one. And the next one is taxation of group health insurance. This one here was individual. The next one is group. We are getting near the end of this exam study guide.